Chua. All right, what's going on, guys? I got a trade recap for today. Today is September 3rd, 2025. It's Wednesday, and we had 9 a.m. red folder news. Again, for me, the market opens at 8:30, so I was waiting for this 30 minutes of price action to play out until news came, and then I took my trade. Just to start at a top-down analysis on the daily time frame. Um, on the daily, the biggest thing I saw was this SMT. So yesterday's price action, Tuesday, we took out this low, okay, on the correlated asset of ES, the top 500 stocks. We can see that we did not take that out. So that creates an SMT divergence, meaning one of the assets, either NQ or ES, I trade on NQ, took out a low, a significant low, and the other did not. But since they are correlated and they trade with each other, that technically means that ES took this out. So there's no reason for ES to come down here. There's no reason for us to wait for this low to get swept because NQ already swept this low. And we have to remember that the higher time frame holds higher power. So the daily over the 4 hour, the 4 hour over the 1 hour, and all the way to the 1 minute. So this is a daily bullish SMT, because if we're taking out a low and we're hitting a liquidity point, where are we going to go next? We're going to be bullish if we have those confirmations. So this is a bullish SMT when we take this low out. So coming into the day, we have a daily bullish SMT. So that already shows me some bullish. Then we go down into the 4 hour. Right here, we have a 4 hour bullish fair value gap that is created. So fair value gap is the 3 candlestick pattern, 1, 2, 3, where the middle wicks do not touch. Right here. This is a 4 hour bullish fair value gap. If we can zoom in here, we see that London low and Asia low both got printed in this 4 hour bullish fair value gap. These lows are now considered sponsored. There's no reason for us to trade back into these lows immediately. So if I wanted longs today and I said, all right, I'm going to wait for these lows to get swept at market open and then I'm going to long, that doesn't make sense in this scenario because these lows are inside of this fair value gap. So when they're inside of this fair value gap, look, again, we're bullish, right? So we have this 4 hour bullish. We're coming up. We come down into this 4 hour bullish and we get buys out of it. So now we're just showing a bullish price action on the 4 hour. We have a bullish SMT on the daily. So now we go into the 1 hour. Oh, I thought it was gone. All right. When market opens, we have these two 1 hour fair value gaps. Okay. We have this one. We have this one right here. Is it? Oh, it's just not big enough. Okay. So we have them on both indexes. We have this one, this main one here, and then this one here as well. So this top 1 hour fair value gap got closed below. And I know that that threw some people off because if we're closing through a 1 hour, we're going to say, hold on, this is inversed, and we want to go lower. But as you see, we did go lower. We tapped right into this 1 hour fair value gap, and we got buys out of it. We go on ES, same thing. We close below this discounted or this premium 1 hour, and we come down below, tap into this discounted 1 hour, and we get buys out of it. So just because, especially when we have two 1 hour fair value gaps stacked right over each other with these, 3 candlestick patterns, we're going to want to see that the lower one, or the one that would be taking us away, if we inverse both of these, then, okay, I'm switching to bearish, and maybe we want to take out sell side liquidity. But we can see that we inversed this first one because we had to respect this second one to then go higher. So, okay, now we'll go into when news came out. So remember, we have a daily bullish SMT, one. We've got a 4 hour bullish fair value gap, and we have a 1 hour bullish fair value gap that we're respecting. So now we're waiting for 9 a.m. 9 a.m. rolls around, and we print this data low right here. So 9 a.m., we get this crazy candle, like nothing else really. We get a wick to the bottom, and we get a data low. We have to have our correlating asset right, so ES. We have 9 o'clock, our data low. So we see that we have an SMT here. So now we're pairing a high time frame bullish SMT with a low time frame SMT. What's a SMT again? An SMT is when your level gets swept on one index. So this low gets swept right here on ES, but this low does not get swept on NQ. In reality, it means one of them got taken out on one asset, meaning since they're correlated assets in indexes, that it technically means it happened on both. Also, another thing, we can also apply the same thing here. We have a 1 hour bullish for value gap, and this wick, this data low wick, gets printed right inside. So it's a sponsored low. It does not get taken out on this asset. So after we have this SMT here, we're going to look for the highest time frame inversion. My goodness. So we start at the 5 minute. Just for the model, we start at the 5 minute. Do we have a 5 minute inversion for value gap? No, we do not. We go to the 4 minute. We do not. After this right here. So we're looking in this area. Do we have a 3 minute? Yes, we do. Okay, so the 3 candlestick pattern. 1, 2, 3. And this is one leg because it's blue, black, black, blue. There's no highs and lows. It is just one sweep leg. So in this, we have an inverse for value gap on the 3 minute. It gets inversed up here. What do we do after that? I'm personally waiting for a 1 minute confirmation. So boom, we see this huge 1 minute bullish for value gap open up. And this is our inverse leg right here. We have this bullish for value gap open up. And we have respection. We start going up. To be honest, I thought the trade was going to leave me and go straight to the draws on liquidity. But that's okay. I was just going to let the trade run. If so, I'm not just going to jump in. I personally like the respection of the 1 minute. I think I'm going to be doing more back testing and kind of data getting over if I should be adding the 1 minute or if I should just be entering off the inversion. But that's just going to be something for later. So we have this 1 minute bullish for value gap. We tap in with this, and then we have a bullish response out of it. Just to make sure, we have to make sure there's a candle closure that's, bullish out of this gap, and I entered on the next candle. Now that I'm seeing this trade after it played out, obviously it ran to my higher draw on liquidity. These draws on liquidity for me were 2 1 hour internal highs. So this is previous day high, and inside this previous day high range that we have a high of an up and then an up candle and then a down candle, which creates a high, and we have an up candle and a down candle, which creates a high. So these are both 1 hour internal highs. When we go on ES, we still see that we have not even hit these 1 hour internal highs. We have previous day high, just like we have on NQ. We have 1 hour high and a 1 hour high. If they were trading the same and hitting these levels the same, I do think that I would have held. But because it was trading so far below it, I decided to add in a break-even point. So in this first trade, I enter right off of this candle closure that gives me a bullish respection out of this fair value gap. This high right here is a 15-minute internal high of the day. Okay, so this high is the highest high that we've had since market has opened. So once we go above that, I am going to break even the trade, which means moving your stop loss to where you entered in. So right when this candle past this point right here, I moved my stop loss where I entered the trade. And I thought it was going to continue up and take out this, and it was going to be a risk-free trade. But it didn't. This candle came back at 927, and this candle passed the point to where I entered the trade at. I had my stop loss right here at this point. So technically, if I would have just wrote it out and said, hold on, I'm just going to keep my stop loss there, I would have got taken out of the trade, and I would have lost the trade for the day. So this break even actually saved me. And so this trade ended up failing. It was break even. I got like $3 off of it. So, just it's nothing. So we can get rid of that. And now this is the new high point, right? So again, we have this 1 minute bullish, and I figured I had a really strong bullish bias on the day. And this is a huge 1 minute that is most likely going to get tapped into again if we do not displace immediately from it to that liquidity point. So we can see that we sweep back down in, we take out this low, we just trade lower into the bullish fair value gap, but this candle right here gave me so much promise that we were going to deliver. So we basically have a retest, right? We invert this, we come higher, we retest down, and then we're able to flush and go all the way to our liquidity point of 1 hour internal high and the secondary 1 hour internal high. This is the inversion, and this is just the model. So we inverse something, we respect a 1 minute to give us confirmation, and then we take it higher to our draws on liquidity. So at this point, I also had a break even because I had a break even on the first one. I'm going to have a break even on the second one because it could happen again. So this high, that is now the most prominent high, this is a 15-minute high if I go back, was my break even point. So when I entered this trade at 9:31, at 9:33, we hit this break even point, we pass it. It doesn't have to be a candle closure, it just passes that point. Once it passed that point, I put my risk off. Now this is a risk off trade. Technically, we could trade all the way up until right before my TP, and we could come down and then go back up, and I would get stopped out. But it's at this point, when you go break even, it's free money. It's the risk is off. You sit back and you just watch, and you have to be confident enough in your draw on liquidity to say, I'm bullish based on this. There's a daily SMT. There's the low time frame SMT. There's the 4 hour bullish respection. There's the 1 hour bullish respection. We have higher time frame draws. We have 1 hour internal high. We have another 1 hour internal high. We left data lows below with an SMT there. So all those things stack up, keep your probability up and up and up. If it was just, we respected a 4 hour, let's enter now and just hope it goes, your probability would be, 10%. But we have the 4 hour with the 1 hour with the daily and the 2 SMTs. And so now you just keep going and going up. So at this point, it was a risk off trade for me. I'm break even at 9:33 and 34, 5, 6, 7. So 4 minutes later, full take profit is hit. It was for a 1 to 30 or a 1 to, let's see here, what is it at? A 1 to 1.38. That was the trade. So it was a little more than a 1-to-1, and then it was a freaking banger trade as soon as you take the risk off. Of course, I would have wanted to hold right here, but like I said, since ES was so uncorrelated and was not trading the same at all, it wasn't the smartest decision for me. Like I said, if we would have traded through, we hit this at the same time, we hit this at the same time as we're doing this, then I would have just been riding the wave. But I got off right there, and that was it. It was 2 risk off trades, 1 break even, gained like $3, and then this one right here was the full trade that I took to that 1 hour internal high. So that is the trade recap for today. Pretty strong bullish bias from the beginning of the day. Step 1 was waiting for high time frame news to come out, or high impact news to come out at 9, and then from there, waiting for the setup to come to me. Obviously, if we see right here on this 3 minute, I could have just taken the inversion. And I know some people that did take just the inversion. As soon as this gets inverted, you're here, you're here, and where? You're most likely you would be a bit lower than that. You're around this. Some people did take this trade. I personally like the 1 minute confirmation. So in reality, I took it right here. They took it right here. A couple points right there. What does it matter? But I just personally like that 1 minute confirmation. It does me better, and it allows. Yes, there are some setups that run without it. So that is what I'm trying to fix in the strategy. But when that 1 minute gets retested and goes, or even gets retested again, and it does not break through, I'm the most confident in my draw than ever. So, all right, guys, that is the that is the trade recap. Hope y'all learned something from that. Just to have the top-down analysis, to wait for high impact news, and to just put everything together to grow your probability before you take a trade. But yeah, thank y'all for watching. I love y'all. Remember, Jesus loves y'all. Later.